What to make of the markets? What should be a strategy amidst all the news flow that is around? Let's try to decode that with our experts then. And let me welcome Sandeep Sabrawal, who is joining us on right now. And to guide us on the technical setup, we have Kunal Bothra as well as Chandan Taparia with us. A very good morning, gentlemen, and thank you so much for your time. Kunal, let me come to you first to have your take on the benchmark indices, and especially on India VIX as well, because 19 odd level, I clearly remember that was the danger number that you were highlighting. We have crossed above those levels. GIFT Nifty indicating a gap down start. What do you make out of this?
Yeah, good morning, Srishti. So I think we largely know that the move has been spooked by what's happened across the geopolitical part, India, Pakistan, sentiments. And I think the best way to measure this is the rise in India VIX. So we flagged off that 19 is a level where above 19 levels is where we expect and anticipate the markets to eventually take a bit of a turn of sorts. Now there are two important parts over year. One is that we are heading to that level of 21 plus 22 for the India VIX, and historically about 21, 22. There have been many cases where the markets have gone to a panic bottom. Case in point, what happened, I think, in the first week of the month of April, 6th of April, 7th of April, where the index was down at 22,000 odd levels. That was a time when the India VIX had shot up to 22 plus mark. And, that was just about a momentary day for the VIX rising up to those levels. Post that, we saw the markets bottoming out. We are in that phase where I would believe that eventually with the next couple of days we might be at a point where there could be a panic bottom at place for the markets if the India VIX stops to rise. So the only factor which I think one has to watch out for is retracement on India VIX. If we scale down back to that sub 20 mark, sub 19 mark in the India VIX, say over the next couple of days, very high chance that the markets could form a short to medium term bottom.
And Sandeep, that's the thing, right? That we've seen such situations. We knew that there was a possibility that things could escalate between India and Pakistan. Sandeep, what is your sense? What can investors do right now? Because, I mean, yes, the GIFT Nifty is indicating a 200-point gap down, but is there reason to really panic?
There's no reason to panic, but there's reason to be cautious, especially for investors who do leverage trading and leverage investments. I think they should keep their positions light. Long-term picture should not change in any way, actually. But there could be heightened volatility in the short run because we really don't know how this entire situation is going to pan out. So any view which we give today as to the degree of the escalation of conflicts or de-escalation might turn out to be totally wrong. So I think the next 3 nights, the weekend, the 3 nights of the weekend become very important. And I think by Monday, we'll have much greater clarity.
Okay, so hoping for some clarity over the weekend and we'll have more time to gauge the developments. Hopefully they're not escalated and to the extent that we've seen last night.
Chandan, what is your take on the markets? Because yes, of course, there has been a big spike in India VIX, but with this gap down start, we are not just seeing that's Nifty 50 that is actually indicating there could be some bit of an implications on Nifty Bank as well, because in the past 2 to 3 days, Nifty Bank has been correcting more when it compares to Nifty 50. What is your sense on the benchmark indices?
Yeah, good morning, Jai and Jai Bharat. So we have seen a swing in India VIX. India VIX spiked by around 10% the last trading session, headed to 21.89. And I believe it can continue its upward journey and can head towards 24, 25, which may even give more roller coaster ride to the market. The recent high of the India VIX is 21.19. It made on 7th April. So I believe that some swings could be there. But talking about trading levels, I believe 23,850 would act as a major support, because 8-9 days back when market retraced, it took the support at 23,850. And on previous instance also the same was working as a resistance. So role reversal kind of pattern was visible in the market, and I believe in this volatility 23,850 could act as a major support to drive the next leg of rally towards 24,444, 24,550 marks. To reply on Bank Nifty, it started to underperform, but has been consolidating in between 54,000 to 56,000 zone from last 12-13 trading session. I believe the range could be shipped on the lower side and it can go down towards 53,000 marks. So 53,000 to 55,000 will be the next probable trading range for the Bank Nifty index now.
Okay, thanks for that view coming in. Sandeep, just want to get your view on the India VIX. Now, we've, of course, amid a situation like this, volatility is certain to be seen in the market. But given the spike that we've seen yesterday and given everything that's been happening along the border, where do you see India VIX headed going ahead, and how bad could it get before it starts improving?
VIX is just a derivative of what's happening in the market. So it's a derivative of the volatility that plays out. So predicting VIX is a tough task because we don't know what will be the extent of volatility that will be there. But then I think it's more a fundamental question of, let's say VIX spikes up hugely today, and over the weekend and situation entirely gets de-escalated and all hostilities stop, then there is no implication per se of the spike in volatility. And on the flip side, the volatility falls today, but things get more escalated over the weekend. So VIX will spike up on Monday. So I don't see any logic of tracking VIX to use it to predict markets.
Yeah, it's going to spike up. It's spiked up last afternoon itself, and I'm sure it will a little bit more before things settle down. And maybe, like Sandeep said, over the weekend, you will see some resolution towards a ceasefire hopefully happening. But I think the knee-jerk reaction cannot be negated. The pre-open rates itself, although I will give them some time to settle down, we're staring at a 4% cut on the Sensex. It will ease down for sure. We're now less than 2% lower for the Nifty. That will also ease out further. But the rupee, bring up that one up for you, because that's where you're seeing the bigger moves happening. 85.82 right now on the currency, although this also, I must say, is a very, very measured and calibrated response by the currency markets, although they have been volatile of late. In any case, we are still pretty much at weak levels. 85.80 on the dollar rupee is what you're currently seeing. Sandeep, in the very near term, we will see knee-jerk reactions, not just for the equity markets. We will perhaps have some impact on flows as well. We will see moves on the currency market, and we will see moves on the bullion market as well. As a very tactical strategy, what would you recommend to the viewers?
So I think my view would be that to keep the leverage trades low. So I think that's all investors can do. If you have a good long-term portfolio, you're not going to sell it off just because of what's happening right now, because the longer-term prospects do not change. If you are looking to invest, then I think it makes sense for you to spread it out a bit, watch out till next week, see how things are moving by next week. Because one thing is very clear, at least in my view, that this conflict will be short. It won't be a very long drawn one. So in that context, the resolution will happen one way or the other. And the only thing is how much does the escalation happen? And we need to understand that sitting here, neither me nor you nor most of the people who are commenting on the markets today have any idea of what's actually going to play out over the next few days. So in that context, giving a conclusive view on this is what should be done today is very tough.
Right. Oh, yeah, absolutely. You know, these are things that one can't really predict. Market is a forward-looking beast. You did see that spike up in volatility happen last afternoon itself. And you will see that knee-jerk reaction till the markets try and digest what's really happening with regards to escalation on the LOC. And Sandeep, I want to come to you on some of these earnings, right? And let's start off with L&T. We were just chatting last afternoon and anticipating what's going to come out from L&T, and this is a positive one. Finally, I think the stock, which has been just so languishing and not really performing or catching up with the market rebound all through April, maybe this is going to act as a trigger.
It should, because L&T got wrongly sold out few weeks back when some analysts came out with reports saying that because of oil prices being down, etc., a lot of their projects could get cancelled, and to that extent, L&T will be an underperformer. But I think the results and their guidance reflects otherwise. And it is one of the large cap stocks still is in a good valuation zone.
Sandeep, also help us with your view on Titan, because when the company came out with its Q4 update, it was a very good set of numbers even then. But despite that, the numbers that we've seen coming in last evening, over and on top of that, it's been a beat. What is driving such a strong growth coming in for Titan, given their main thrust is the gold jewelry business, and we've seen gold prices spike significantly? On one hand, they're saying that they are seeing muted consumer sentiment when it comes to gold prices, but on the other side, all engines have fired for Titan very beautifully this quarter. Help us understand and make sense of the kind of quarter Titan has had.
So it reflects the quality of the management and the brand they have built. Because in a muted market, when consumers decide not to buy so much of jewelry, they gravitate towards some of the established players because of the reputation they have built, and especially Tanishq. So I think that's what is working out for them. Results in terms of growth, the growth overall is still lower than what they used to deliver historically because of the impact of consumer demand last 2-3 years. If you take a couple of years CAGR, it's not as great. The key is how they do in the future, because although the near-term delivery of results has been decent, the valuations are not very cheap. So they need to deliver over the next couple of years for valuations to sustain.
Oh yeah, interesting. Then there are good numbers from Biocon, good numbers from Britannia. BPCL has bagged a contract to set up a 100 megawatt wind farm as well in MP and Maharashtra. Pidilite has come out with very good numbers, or largely I would say in line, not really good. But yeah, the volume growth at 9.8%, that indicates very strong growth underlying. Kalyan Jewellers, with all that's happened with Kalyan Jewellers in the quarter gone by, not with the company's financials, but you know, the other regulatory stuff which was on, the EBITDA has seen a jump up of about 35%, revenues have risen 36.6%, so great numbers there as well. Jindal Steel, the Q4 numbers largely in line, net debt has seen a decline. Lupin, they've got a US FDA nod for one of the HIV drugs. Brigade Enterprises, another 11-acre of a land parcel that they've acquired in Whitefield in Bangalore. So a lot of positive underlying stock-specific news flow that one can focus on. Having said that, I must mark what the pre-open rates are looking like for the markets, because they finally settled in. And let's not sugarcoat this, it is going to be a knee-jerk reaction, but at less than 1.5%, I don't think it's such a grave move really coming in. We are going to be sub that 24,000 mark for the Nifty. But Kunal, what's the likelihood that we may actually cover into this dip? Because like I said, a lot of positive earnings really coming in. So you think eventually the market will cover this decline that we may start off with?
Yeah, I think it should, Aisha, because, as I said earlier, that the best way to try and navigate the market is to try and, anticipate or look at the trajectory of how VIX has done. And, when you're looking at an event which is already started, when an event which is, maybe the markets would probably anticipate that there could be, say, over the next couple of days, there could be a ceasefire which sort of could happen. That could result into a drop in the VIX and eventually lead into the markets forming a near-term bottom. And then we look at this in the context that, over the last many days, we've actually seen, over the last, in fact, 10 consecutive days, we've actually seen reduction of long positions which were happening on the markets. So that could also be another factor. So, just to put the context in terms of data, there was almost like a 20 to 25% drop in the open interest on a very gradual manner, which is happening over the last 10 days for the banking index. Now that money which has been drawn out from the banking index, that would start to get deployed, sooner or later, because when the bank nifty starts to get into a corrective phase, there's eventually the money which would be deployed back again. So my anticipation is that hopefully in the next couple of days, we might actually see the markets getting back into a bottom formation mode. I think 24,000 mark, 23,850, this is a very important support zone for an index trader today. If you manage to hold on to this level, even the first half an hour, first 1 hour or so, there could be a higher chance that intraday also we might sort of see a bounce for the index.
Okay, here's hoping for a bounce. Right now, not this week, but the pre-open rate is indicating a little bit of a quiet start. But
if you like this video, then like, share and subscribe to ET Now.